Hello everyone, welcome to the Ichimoku daily analysis for the Euro US dollar FX for Monday, March the 5th, 2012. Well, a continuation of the trend to the downside for today's candle, and today's candle has made a lower high and a lower low. But very quickly we can see that the colour of the body of the candle has changed. It's changed from black to white. And that tells us that we've had a change of downside momentum in this market in terms of who was making net progress. For the previous 3 days trading, we had the sellers making net bearish progress. Today the buyers have made net bullish progress. Not a large amount, but it does raise some concern about the potential for the trend to continue down. This also is a spinning top type candle, and we have the shadow on the top and the shadow on the bottom, and that represents downside price rejection as the market tested to the Kijun-sen, which held as resistance, an upside price rejection as the market tested below the support at 131.96 and down to 131.45. So an indecisive candle has set this market up for a potential change of trend to the upside. We should be looking to the high of this candle for a potential higher high and higher low, and that's at 132.40. In terms of Ichimoku, the market remains bullish in the big picture time frame by trading above the cloud, but it is also bearish in the medium term and fast time frames by trading below the Kijun-sen and the Tenkan-sen. The Kijun-sen is flat, and the market price action is trading around the Kijun-sen, representing equilibrium in that medium term time frame, and that Kijun-sen will hold as potential resistance for this market. So that is a very strong barrier to the market trading up. At the moment we do see this candle developing, and it is white at the moment, but it doesn't mean it will remain white, and it's testing the resistance at the Kijun-sen already. If we do trade higher, then we do have resistance up around the 133.20 level, which coincides roughly with the Tenkan-sen, and that will offer itself as strong resistance for this market. Down below the support at 131.45 we have the cloud, and we have a large zone that extends all the way down to roughly about 129.50, so potential for very strong support down below. So an indecisive candle, potential for a change of trend to the upside, but we do need to watch the area around the high and the Kijun-sen. Next, moving to the Aussie dollar, US dollar, and here we see another large black body candle denoting the sellers making very strong net bearish progress on the day between the open and the close. Previous day's trading we had a trend to the upside, but a black bodied candle which did set the market up for a potential change of trend. We have had that change of trend in the first time frame today, with this candle making a lower high and a lower low. The sellers are in control of this market. They've closed the market down towards the low, very close to the low, and they've shown very strong commitment to taking this market lower. The market previously found support at the Tenkan-sen on the previous 3 or 4 or 5 candles actually, so the Tenkan-sen was very strong support for this market, and in today's trading we've actually taken out that area, and we've also taken out support at the Kijun-sen. So that could be quite significant for this market, that we are now trading below the Kijun-sen, and it means that the trend in the medium term time frame has actually changed from the upside to the downside, and we've taken that out in a very bearish manner. So there is potential for this market to trade to lower levels over the coming days. If we look back at the price action, it's been quite some time since we've been trading below the Kijun-sen, and that could be significant. If the market does trade lower, we do have very strong support at 106, which was a previous area of resistance and indecisive trading, and then held as very strong support in the recent past. We do also have potential for support at this boundary of this type of megaphone pattern, a broadening pattern. It's not a textbook type of pattern. but it does highlight the large amount of volatility that's happening in this market, and quite often, as I've mentioned before, volatility at the top of a very strong trend is potentially a sign that the trend has peaked and will sell off and retrace into the previous second time frame uptrend. In terms of Ichimoku, we are trading up above the cloud, so the market remains overall bullish in the big picture time frame, but now bearish in the medium term and fast term time frames, but trading below the Kijun Sen and the Tenkan Sen. Just looking at the Chikou span, that's still above the corresponding price action, so it's confirming the big picture bullishness that we're seeing, but failing to confirm the bearish activity that we're seeing in the shorter time frames. So at the moment we have this market trading within this very large congestion area after trending very nicely in a very efficient manner with a strong series of higher peaks and higher troughs. Very volatile trading at the moment. If the market does come down and find support down around 106 or just below, we could even see the market bounce and trade back up to the 108.43, so a lot of volatile trading. If we do take out the area down around this barrier for this large congestion area, then there is solid support down around the 104.50 level roughly, and all the way down to 117.5, 101.75. And at a few other areas down below there, this minor resistant support level, previous support level at 102.32. So a market that's very indecisive, a lot of volatile trading. The trend is down, the sellers are in control in the short term time frame. 106 is looks like it's setting up as a very important area for this market. Next, moving to the US dollar Japanese yen, and here we see a bullish market with the trend remaining up. Previous candle and 2 or 3 candles before that, we had establishment of the trend to the upside, with the candle making a high high and a higher low, and that's continued in the previous candle. But today's candle, we have the market failing to take out the previous high, but also failing to take out the previous low. So in bar chart terms, an inside day, and that does raise some doubt about continuation of the trend to the upside. The market is trading within this large zone of resistance that we highlighted previously with this yellow that extended from roughly 81 up to about 82.20, and we have seen some indecisive type trading in there. The previous day's trading, however, was quite bullish, but today is rather indecisive with a small black body at the top of this trend and a long shadow on the bottom of this candle. Now this is a potential candlestick reversal pattern, 2 types actually. It's a potential tweezers top pattern, and they tend to be quite strong, and also a harami pattern, and both of those patterns do require confirmation of the change of trend. And confirmation would be a candle that has a lower high and a lower low relative to today's candle. In terms of Ichimoku, the market remains bullish in the long term, medium term and fast term timeframes by trading above those 3 indicators, and the Chikou span is confirming that bullishness by trading above the corresponding price action. As I've said quite often, when the Tenkan Sen is pointing up sharply, it's representing very strong upside momentum in the fast term time frame, and very often the market finds initial support at the Tenkan Sen when it comes off, and we can see that over the previous week that the market found support there. So the area at the Tenkan Sen around 80.85 is very important if we do see the correction in the market that we're expecting because of the potential for the candlestick reversal patterns. And if we do see some support coming in around that area and the sellers starting to lose commitment as the market trades around there, then there is potential for that to be another swing low and the market to begin trending up in the first time frame again. So we do need to watch that area over the next day's trading. Below there, the area around 80.22 should provide solid support for the market. It acted as a zone of previous resistance and then as support, and then down below there's 79.52. Above this yellow level, if we do see the market continue on its way, then we do have resistance up above there at 82.79 and at 83. So a bullish market, but the short-term dynamics are failing to support the bullishness. There is strong potential for a change of trend to the downside, but we should look to the Tenkan Sen at 80.85 for potential support.